Hello everyone, welcome online. We'll be waiting for a minute or two to see or wait for more people to come online. But while we're waiting, please write in the chat, what are some of the expectations you have for this webinar? I'd love to hear from you. Hello everyone, thank you to this webinar. I'm glad to have all of you guys online. We have a pretty interesting webinar ahead of us, and we actually have over 200 people who have signed up to this webinar. Of course, not everyone is able to make it online, but we will have the live recording afterwards for them so that they can watch it afterwards. Now, it's an important topic, buying a home in Finland, and one of the things we're going to address now is now a good time to buy a home in Finland? And I suppose most of you don't know me, so I'm just going to briefly introduce myself. So my name is Sakari Tolppanen, a very Finnish name, I know. I'm born in Finland, but I've lived abroad, so I speak English quite well, as hopefully you can tell. I like to think of myself as having three hats. The first hat that I wear is that I'm an educator. I have a degree in education. I love education, and that's also one reason why I'm holding this particular webinar, because I like to engage people, get them to think and learn new things. Now, the second hat that I wear is that I'm a researcher. I have a PhD in education, and I'm not only a researcher by trait, but I'm also a researcher by character. And by that I mean that I really like to look deep into things and understand how the world works. And this also means that when it comes to the real estate market, I really like to look deep into things, and I've spent countless, I would say thousands and thousands of hours to understand how the real estate market works. And so I'm happy to share a bit of that with you today. Now, the third hat that I wear is that I'm an entrepreneur. I'm a businessman, a real estate investor. And as an entrepreneur, the thing that I really want is that I want to see other people succeed. And that's what drives me. And that's also what drives the businesses that I do. And that same goes with this business that I have right now, which is Mikasa Consulting. I really want to help people succeed in buying a home. I've seen too many people do some bad mistakes in the real estate market, and of course, those can be quite pricey. So, one of my aims is to really educate people. I do that by providing training. This webinar, of course, is an example of such. I also do workshops. Previously, I've done these workshops mainly for businesses. I've done a workshop in Supercell, Remedy, and companies like that, where we really delve deep into what are the things you need to know when you want to buy a house in Finland. And I actually have a workshop coming up in January, which is for the first time open to the general public. So if that's something that you think that could be useful for you, you can find more information online on my website. Unfortunately, I can only take 15 people into that workshop because I really want the communication to be good so that we can communicate online. So there's a limited amount of people that can attend. The other thing that I do to help people is I do property analysis. I know that especially for foreigners, a lot of the paperwork that's involved in buying a home can be quite a pain. So what I do is I analyze the papers, make sure that there isn't any hidden things, no skeletons in the closet, and just to help you understand the property better, which you are interested in buying. And then of course I'm also reachable by email, phone, and so forth. So if you have questions, you can call, we can book a time, and we can go through the challenges that you have, and I'm glad to help with stuff like that. So in all, what I really want to help is help you succeed in buying a home. And now the focus of this webinar is actually to build and give a big picture. So we're going to look at the macro trends, and that really helps us understand, is now a good time to buy a home in Finland or not? And I always want you to make the decision yourself. So I'm not going to give straightforward answers, but I want to engage you, engage your thoughts so that you're able to make those decisions for yourself. And so just for an overview of the things that we're going to cover today, first we're going to look at the history of the current state of the markets. I think for us to be able to sort of understand what might happen in the future, it's always important to understand the past as well. Now, I know that history, to some people, it might seem a bit boring, but I think in this context, it's going to be very important and useful for you. Now, we're also going to discuss what are the factors that drive home prices. And based on those, we can sort of look at what can we maybe expect in the future. Now, when buying a home, there's always a lot of risks as well involved. So we're going to cover some of those main risks, which will also help you in answering the question for yourself, whether now is a good time to buy a home or not. And then we're going to delve into whether it's a good decision maybe for individuals. I know that in the crowd here, we have people who are buying their first home, and we have people who are real estate investors. And depending on which group you're in, you might have slightly different needs and a slightly different way of looking at the market, or at least I think you should have. And so I'm going to address those two groups slightly differently. And I think it's going to be useful depending on, or either group you belong to, it's going to be useful to hear what I have to say for each of these two groups. So before we delve into all of that, there is a few things that I want to say what this webinar is not about. And as I already mentioned, I'm not about giving clear-cut answers of yes, you should buy a home, or no, you shouldn't buy a home. I want to leave that decision up to you, and I want to educate you to help you make that decision better. And I'm also not up for black and white answers. I think the world is complex, the real estate market is complex, and each individual's life situation is complex. And all of these factors should be taken into consideration when you're deciding whether you want to buy a home or not. And that's also one reason why I don't prefer to give clear-cut answers without knowing the exact details of where you're coming from. Also, I'm not giving investment advice. I'm giving ideas, and it's up to you to decide whether you're going to buy a home or not. So yeah, just to sort of put that out there so you know where I'm coming from. So I think it's time to look at the history of the real estate markets. So in this chart here, you can see that the house prices in Finland have had a lot of variance within the past 50 years. This chart goes back 50 years, and we see, especially in the late 80s, we saw prices almost double within just a few years. And then when the Soviet Union collapsed, Finland had some major issues with our economy, and so house prices came down to about half of what they were at their peak. So a lot of variance in a very short amount of time. Now, since then, since the late 90s, we've had a steady increase in home prices. We have seen a few dips along the way. So in 2000, 2001, there was the dot-com bubble, and that also had an effect on the real estate market in Finland. And then in 2008, 2009, we had the global financial crisis. And even though it was mainly or primarily a crisis that started from the USA, it did definitely trickle down to Finland as well, and we saw that in home prices. But we've recovered from that, and prices have continued to rise and rise. And actually, this chart that I show here, it only goes to 2009. So this next chart, we go a little bit further. So this goes closer to today. And this chart actually shows the different variants that we see in different parts of Finland. So the greenish yellowish line, that's the capital region, so Helsinki, Espoo, Vantaa. We see that prices have continued to increase after the 2008 crash. In the rest of Finland, not so positive, so prices have actually declined gradually. Of course, here again, we can't put all of the towns and regions into one group. There's different towns where this trend isn't the case, but this gives you the general picture of where we are at. Now, from a historical perspective, we are still at high prices if we compare to a number of different factors. These charts that I show here, they are inflation adjusted, so it already takes into consideration that there's some inflation, and even taking that into consideration, prices are relatively high at the moment. Now, I know a lot of you are living especially in the capital region, maybe Tampere, Turku, some of these bigger towns that we have in Finland. So here's a chart how the prices look like within the past 5 years in these regions. We see that especially in Helsinki, prices have risen, and the same also goes for Turku and, well, pretty much all of these towns that are listed here. In some towns we see more increase, and in some not so much, but the trend is still clear, it's upwards. Now, this chart actually doesn't cover what's happened after the coronavirus, but other than how many analysts expected, we've actually seen an increase in prices in many of these towns rather than a decrease. So more and more people have been wanting to buy a home within the past half a year or so. So I think for us to understand and to analyze whether now is a good time to buy or not, we need to understand both the historical trends and then also take a look at how the real estate market is somehow correlated with the stock market, which it happens to be in many places. So in this chart, we see on the left, there's the real estate prices in Helsinki, the capital region, which was the green line. Those have went up, but in 2008, they came down. And the same goes for a lot of the stock markets. Here on the right, we have the S&P 500. So that's the 500 biggest companies in the US. We see a very similar trend. So in 2008, 2009, prices came down, and then they've gradually risen again. So there's something going on. The real estate market seems to correlate with the stock market. And there's actually a few things that have been driving this increase in prices in the real estate market, and we're going to cover some of those next. There's supply and demand, there's central bank policy, and there's government support and subsidies. Of course, there are also many other factors, especially when we look at micro locations and specific towns. But if we look at the big trends, these are some of the things that we can at least say that these definitely have an effect on the housing prices. So first off, supply and demand. So in Helsinki and some parts of Finland as well, other parts, but especially in the capital region, for many years there was a lag in how many buildings they were building. So there was more demand than there was actually supply. This started to change in Finland in 2016, 2017. The cities, the towns, they were giving more building permits. And in this chart we see here, the green line is how many apartment buildings were built. And so we see that since 2016, the number has been gradually increasing until around 2019. So it's taken a little bit off of the demand side. So the demand, it's still strong, and you can tell when you go to a viewing in the capital region, there might be 20, 30 people looking at the same place, and it might be sold already the next day. So that tells you that there's a big demand and not quite enough supply, at least not for reasonably priced apartments. In the rest of Finland, the demand and supply, it's a bit more balanced than in the capital region. But I would say that in many of the big towns, there's still some demand or not quite enough supply, maybe better put that way. So another thing regarding supply and demand is that investors, they're always looking for safe places to invest their money. And we see from this chart that I have here that government bonds, so what governments are willing to pay people who lend them money, those yields have come down. So you're not making as much money if you lend to the government as what you were before. Before it was easily 3, 4, 5%, and now it's below 0%. And investors who used to invest in government bonds, they don't find those that attractive anymore. So there's been more investors coming into the real estate market, and they know that if they buy a house there or an apartment, they can rent it out and they can get maybe a 3, 4, 5% return annually on their investment. So it makes sense to buy an apartment rather than investing in government bonds. So that's one of the big drivers that has been driving demand also within the past few years. And this is a trend that we see globally, especially in the Western world. The same thing goes for the US, Canada, and pretty much all of Europe. So this is definitely a big force that has brought up prices in the real estate market. Now, that is also related to central bank policy, but just a few words more about this. Now, central banks are to some extent the ones who determine what the interest rates will be. And from this chart, which is from the US, but similar charts are the same all around the world, and I will show you a chart also how the European interest rates have adjusted in the past few years. But we see in the middle of this chart that in 2000, 2001, we had the dot-com bubble. And so banks and the Fed, the central bank, they started to get scared, so they brought down interest rates, because then when interest rates are low, people are more easily lending money because it's easier for them, it's cheaper for them, and so that brings up demand again. And they gradually started to raise those interest rates until then 2008, 2009, we had the financial crisis, and these interest rates came down again. Now, they were historically low for a long time, and in the US, in around 2018, the central bank started to raise these interest rates again, only to find that they're actually not able to do it. The economy started to suffer, so they had to start decreasing those interest rates again. So the economy isn't actually doing so well as maybe we were thinking that it was, based on if you look at, let's say, the stock market has been doing well and so forth. But it seems that there's some fundamental problems with the economy, so the interest rates weren't risen. And this was before COVID. So, of course, after COVID, these interest rates dropped again very low, and again, they're close to zero levels. And what this means is that banks are able to lend from the central banks for very cheap, and then because they get that money for cheap, they're able to lend it to their customers for cheap. And so if you go to a bank, they will give you some quote on what your interest rate will be, and on a historical standard, it's going to be very low. In Finland, typically you might get it for under 1%, and historically, before let's say 2008, that was something that was unheard of. And because people are getting interest for very cheap, that also brings up home prices because more people are ready to take on a loan and go and buy a home with that money, which isn't theirs, but which they got from the bank. This is the similar chart for Europe. We see the same trends here. So in 2000, there was a downturn in interest rates, then they started gradually climbing, and in 2008, 2009, interest rates came down very rapidly. Since then, we've seen a little bit of a different trend, but the big picture is still the same. Interest rates are super low, and central banks think that they're going to do so. They're going to continue staying low for at least the next 2 or 3 years. But who knows, right? The third thing that really affects the real estate market is government support and subsidies. And of course, within each country, these are different. So from a Finnish perspective, well, we all know that the government in Finland gives quite generously. And so as an example, a few years ago, we had a change so that students were able to get more government support for their living expenses. And because of that, of course, the people who owned the places that the students were renting out, they realized like, okay, well, the students will be getting more money from the government, so why not just increase the rent? And so, in fact, the government was first giving money to the students, but the person who actually got to keep the money wasn't, of course, the person who was living there, but the people who own those apartments. And when the rents go up, that also has an effect on housing prices because investors, when they see, well, like if I could get this much rent from buying a place compared to, let's say, investing in government bonds, then the real estate starts to look more attractive and more people come into the markets. And of course, that brings up prices because there was more demand. So to sum up regarding these factors, there's a lot of things that are at play which have a say in how housing markets react. And of course, we can't say for sure if there's a change in government policy, how that's going to affect, because there's many different factors that might overplay. But as a general rule, we can say that if a few things happen, then we can expect for house prices to increase or at least stay around current levels. And I think the 4 main factors that I find in this category is first, if interest rates remain low, as they have done for the past 10 years or so, there isn't too much incentive for house prices to go down. So that would definitely be a positive for house prices to stay at current levels or even continue going up. Now, of course, this is purely policy and politics, so none of us know for sure how interest rates will go in the future, and so that's definitely a risk factor we need to take into consideration. And in a little while, I'm going to talk about some of the risks. The second thing is employment rates. So employment rates have stayed quite high. Let's say prior to 2020. 2020, of course, has been a bit of a mix and no one really knows what's going on in the world even today. But employment rates, of course, do correlate with housing prices as well, because that also tells something about how well the general economy is doing. Now, government policies, as I mentioned, they're a big factor, and if they stay about the same, there isn't any reason why there should be dramatic changes in house prices. Now, that said, there are some government policies in the pipeline which could have an effect. One of these is that currently the government of Finland, they are trying to or considering whether they should take out a benefit that really benefits real estate investors. Currently, real estate investors are able to postpone some of the taxes that they pay because how the real estate markets are built. And if that changes, then real estate markets might not be so attractive for some of the investors out there, which would mean that some of them might be selling their places, so there would be more supply on the market. But no one knows exactly how that would play out. Another way it could play out is that all of the investors decide to raise rents again, and if they do that, then there wouldn't be any pressure selling the places. But who knows? I mean, how much longer can you increase rents, right? There's somewhere going to be a limit to what people are able to and willing to pay. And of course, the economy. It all comes down to the economy. And if the economy takes a big shock, then that typically does have a big effect on housing prices, as we've seen in the historical charts that I showed you. And again, it's really hard to tell which way the economy is going. I will talk about some of the risks out there in just a minute, but just something to keep in mind that definitely the economy has an effect on housing prices. All right, so I've mentioned a few times that there's different risks out there. And risks, they can be categorized into 4 categories. The first type of risks are the known knowns. And these are things that you are already aware of and you understand the risks. So, as an example, if you think that you might be having a child in 2 or 3 years and maybe you won't be working as much because of that, your income will be lower, so that means that you won't have as much money to pay for your mortgage or your rent and so forth. So that's a risk that you know, you can calculate it, and you know how that's going to have an effect on the big picture. So in some sense, it's not really a risk, right? Because you know about it. The other type of risks are unknown knowns. And these are the things that you would understand if someone told you, but you might be unaware of how these work. And prior to the webinar, we asked you to send questions of what type of questions you have. And thank you to all of those who did reply and ask some of those questions that are on your mind. A lot of those questions would fall into this category. So the knowledge is out there, it's available, but you just don't know about it. And for instance, you might not know who's responsible for what when you're buying a place. What is the buyer responsible for? What is the seller responsible for? You might not be aware of all the renovation costs that are involved. You don't know about the taxes and the tax benefits and that type of stuff. And these are the type of stuff that we really delve deep into in the workshop that I have coming up in January. So if that's something you want to educate yourself on, then please do sign up for that. The third type of risks are the known unknowns. And these are things that we are aware of to some extent, but we don't really fully understand how they work. And because we don't understand fully, we're also unable to take the risks involved into consideration. And a good example of this is central bank policy. We might understand to some extent that central banks, they have a big effect on how the economy works. If central banks fail to work or fail to put enough money into the financial system, then the markets could collapse. And this is something we saw in the stock markets in March of this year. But then the central banks came in, they put a lot of money into the system, and the stock markets continued to go up again. But we don't exactly know how they work to the very detail, and especially because there's a lot of politics and policy involved, we don't know for sure what their next step is. So there's some unknowns regarding these. Now, the fourth type of risks are the unknown unknowns. And these are the risks that no one is aware of, or practically no one is aware of anyways, and no one really understands them. And typically in economics, these are called the black swans, referring to the story, people used to think that swans are white, and then someone went to Australia and they found a black swan, and it was a surprise to everyone, like, wow, how can this happen? We thought that swans are always white, but they weren't. And so these are things that come as a surprise to everyone. And these are examples could be, well, COVID-19. I mean, you go back a year from now, who knew about COVID-19? Practically no one. And who would have been able to know what kind of effect it's going to have on the world? Well, practically no one. Or wars could be another example. I mean, we know that they can happen, but we don't know where they're going to happen. We don't know when they're going to happen. And when they do happen, they come as a surprise to everyone, even though maybe they shouldn't be such a big surprise if we study history. But the point is that there are these unknown risks as well. And even if we don't know exactly what these risks are, it is possible to protect us from these risks to some extent. As an example, if you tie your interest rate to a fixed rate, it might not make financial sense at the moment, but you are getting protection from some of the unknown risks. Because if something very dramatic happens in the world, interest rates might jump up. And so if you have a fixed rate, you're protected. So it's good to be aware of them, and then you need to consider for yourself whether you want to protect yourself from this type of risks or not. Now, I mentioned that I want to address the first-time buyers and then also the investors, because I know that both groups of people are present in the audience. So first, to address the first-time home buyers. When you're considering whether now is a good time to buy a home or not, one of the biggest metrics that people typically look at is affordability. And of course, there's many ways how you can determine affordability, but one of the most common ways to look at it is that you compare it to the rent that you're paying. And if it seems like it's going to be cheaper to live in a place that you own yourself compared to paying for rent, then it sounds pretty affordable, right? And I think that in many regards, housing has become more affordable for first-time home buyers in some sense. Even though prices have went up, at the same time, rents have went up quite a bit. And as you see from this chart, now in Helsinki, people are paying around 35–36% of their income in rent. And so that's a big percentage. In the rest of Finland, it's not quite as high, but it's still over 30% in pretty much any place you live. So when you're considering buying a home or not, you're always thinking, well, do I want to be giving this 30 or 35% to my landlord, or do I want to be buying my own place and paying off my own mortgage? Now, that said, it doesn't still mean that buying is the only good option. As I mentioned earlier, there's many different life situations that we're in, and you need to take into consideration the whole picture. Are you well employed? Are you sure that you will be well employed in a few years down the road, and so forth? Because one thing I do want to make you aware of is that it's always possible to lose money in the real estate market if you look at it short term. And that is, if you buy today and you need to sell tomorrow or a year or 2 years from now, we don't know where prices will be. They might be lower, they might be higher. And if they are lower and you need to sell, then you will lose out to some degree. But then again, if you go 5 years down the road and prices are lower then you might not actually lose out so much because you've already saved on the rent. And so after all, even though the price of the home has come down, you've still been living there for 5 years, and compared to paying rent, it might have been a better deal. So typically for first-time home buyers, I say that unless you need to sell at a lower price, then you're good to go. So if you think your financial situation is so secure that you're good to go for the next few years, I would say that at least at some point, prices will be somewhat close to the levels that they are now. That's the historical trend. So even if prices do go down at some point, they do go back up again. It might take 5 years, 10 years, 20 years, who knows? But if you're in for the long term and you're looking for a home for yourself, then you think about the problem as a home buyer and not an investor. Now, that said, of course, if interest rates do skyrocket, I do believe that house prices will go down, and that trend can take for quite a while. And because typically when interest rates start to rise, they do so for quite some time, and we're talking about several years. And so it might take some time to get your money back when you're selling. But again, if you're in for the long term, then it doesn't matter. Also, a thing that you really do need to consider is the hidden costs. When buying a home, there's always going to be renovations coming up in the next few years and so forth. Maybe the lease on the land will be ending and so forth. So you need to take all of these costs into consideration, because otherwise, a few years down the road, it might be hard for you to sell your place if there's a lot of renovations coming up. And I mean, no one really wants to live in the middle of renovations, right? So that type of places are typically a little bit harder to sell, at least for market price. But that said, I think that if you take these things into consideration, then you're sort of on safe grounds. Now, for those of you who are investors, or even if you're a first-time home buyer, but you're thinking about the real estate market more as an investor, then one thing to really consider is the return on investment, so the ROI. In this chart here, we see that the return on investment in the Helsinki area is between 3 to 5%. So that's actually historically a fairly low amount of return that you would be getting. So for those of you who are unaware what this means, if you buy a place for 100,000 euros, then if you have a return on investment of 5%, each year you would be making 5,000 euros from that property if you would be renting it out. 5%, many people think that that's already okay. 3% is already quite low, because you're also taking risk. Of course, if you're paying with cash, then you're just looking at the fixed percentage, and that's fine. But typically what investors do is they take out a loan so that this percentage would actually be higher, because they're getting a higher return on the investment they put in themselves. The percentage can then be 10, 15, 20%, or even 30% if you find a really good place. But of course, with that additional loan comes additional risk, because then if prices do go down, or if you don't find someone to rent the place to and so forth, then all of those risks can materialize. So if we just look at the return on investments, some people might be better off just investing in the stock market, in a company that pays good dividends. You can get 5, 6, 7% dividends from some of the best companies out there. And so, yeah, that's also an option to look at. But of course, yeah, as I mentioned, a lot of people, investors, they take out loans, and that of course brings up better returns, but more risks as well. Now, in one of the questions that you sent prior to this webinar, someone was asking what would be the best town to buy a place in if you're thinking of the markets as a real estate investor. And as I mentioned, I don't give investment advice. I just show you the facts. So this is the return on investments in some different parts of Finland. Now, of course, with all of these, there's different risks. So at the bottom, we have Helsinki, Turku. They have a low return on investment based on rents, but they might have more potential in prices going up. So you're actually making a bigger return than what's indicated here. And then there's other towns where the monthly return on investment might be quite nice, but there's a risk of prices going down. So there's always many factors to consider, and I'm not going to go too deep into this topic at this moment, because I think most of you are still first-time home buyers. Now, I hope that this information that I presented to you gives you some type of idea of where the markets are at right now, and whether now is a good time for you to buy, considering all of the other things that you know about your own life situation. And I guess to sum up, the things that I would want to say is that buying a home, it always has its own risks. Buying any type of investment has its own risks. But a lot of the risks are manageable if you do it correctly. So that's something to keep in mind. Another thing that I do want to emphasize is educate yourself. There's a lot of information out there. I know that in English it's not so easy to come by, but at least I'm ready and willing to help you guys in this process. And just talk to a lot of people also who are more experienced, and that way you can educate yourself. Don't rush into the markets just because you have the fear of missing out. You see maybe the prices go up and you think, oh, if they've gone up this much, they must go up further. No, they don't have to. They might, but they might not. So that's why you need to educate yourself so you can make those decisions wisely yourself. And again, if you're planning to buy a place where you're going to live yourself for a long time, for years to come, then typically it's never a bad idea compared to paying for rent. But if you're an investor who's thinking of what would be the best place to put your money so that it would grow, then real estate investment is an option, but it's not the only option, and you do really want to take the risks into consideration that are involved there. But yeah, I think now what we're going to do is we have a few more minutes, and maybe some of you have written some comments or questions in the chat regarding this topic, so I'd be willing to delve into those and just see what are your thoughts on this issue. Was this helpful? Was it eye-opening for you? Was there something that you have on the top of your head that you would still like for me to address? And I have an assistant here who's been helping me keep track of some of the questions that have been coming to the chat. And so he's also highlighted some of the ones that have maybe come up more often than not, so that I'm able to then address some of those. So someone was asking, is there any risks when buying a new construction apartment? And for that, I would say yes, definitely. Maybe the biggest risk at the moment is political risk. I mentioned earlier that the government is deciding on whether they're going to do some policy changes in how investors benefit in the real estate market. And those policy changes will have maybe the biggest impact on new construction apartments, because a lot of them have a lot of loan and people are expecting that they don't have to pay taxes on some of the rents because they can deduct them from the loans and so forth. But that might all change, and that's potentially going to have a big impact on the markets. What are the advantages of being a first-time buyer? There's several tax advantages involved, and there's also just the fact that typically in those cases you're buying a place for yourself rather than to rent out. So there's certain benefits there because you can look at the markets from a slightly different perspective, as I've brought out. So someone was also asking, how has COVID and the working home culture had an effect on markets in the capital area? And so the general trend is that bigger apartments have been selling better, and also detached homes, for instance, have seen nice increases in prices. But I think even in general, it seems that the markets are doing quite well in the capital region. This isn't the same as, let's say, New York, which is also, well, quite a bit bigger city, but anyways, a big city. There, the trend is actually somewhat different. But in Helsinki, Helsinki has been doing quite fine throughout this. And I think, again, it's a lot to do with central bank policy and the fact that people trust that the central banks will save the day and businesses won't go bankrupt. The government has been putting a lot of money into businesses, helping them survive. So people are fairly confident that the economy will be okay. And so someone was asking, advice on buying old homes in a prominent location. I'm up for buying old homes. I think that's typically where you can make good bargains. But at the same time, you really need to be aware of the risks, especially regarding the upcoming renovations. And so, yeah, you really want to do the math because those are places where you can really go badly wrong. And that's also something that we cover in the workshop. And buying an old apartment and renovating it, I've done that, seen that, I like it. But again, do the math, make sure that it works. It's not so straightforward all the time. All right, so someone was asking whether age has an effect on buying a first-time home. Well, I mean, anyone's of course open to buy a first home, and I encourage them to do so if they feel that that's what they want to do. But typically, no, not really. There are a few instances where if you're under 39 years old, you get certain benefits that you don't if you're over 39. But in the big picture, not really, not that much. Someone was asking what's the worst case scenario if you lose your income, job, etc. So I guess, well, the worst case scenario is that you might have to sell your place if you've bought a pricey place, let's say downtown Helsinki, and you might have to move somewhere where it's cheaper to live and you don't have to pay such a big mortgage and so forth. Or you might want to rent out a room to a friend to make some extra money, and of course trying to find some new work. So it really depends, of course, on the person and the situation you're in. But yeah, it's been great to be online with you guys, and again, feel free to reach out to me if you feel that I could help you in your decision making. And yeah, thank you for joining. I'm not sure exactly how many people were able to make it online, but as I mentioned, 200 people or over have signed up. So it's definitely a topic that interests people. And so I'm happy to have held this webinar and hope to get to know you further in the near future. Have a great day.